The myth of the money multiplier. We all know how money's created. The central bank prints $100, and then banks create $100 more, and then they create $100 more, and then they create $100 more, and then they create $100 more, and then $100 more, and before you know it, we're Zimbabwe, right? No. This isn't how any of this works. So let's talk about how it really does work. If you crack open any macroeconomic textbook, you'll see some version of what's called the money multiplier. This idea that the central bank controls the money supply by lending money out to banks who then multiply that money into loans. It's usually depicted something like this, where the banks get $10 from the central bank and then they are able to then loan out up to $100 in new money. The central problem with the money multiplier is that it gets the causation backwards. In reality, banks with adequate capital will make loans and then find reserves after the fact if they have to. Getting causation correct here is crucial because it's important to understand that banks are not supply constrained in their ability to make loans. Remember, we learned that inside money creates new deposits through making new loans. And if a bank is well capitalized and needs reserves, it can always borrow them from other banks or from the central bank itself. So this raises an interesting question. Why do banks even need reserves at all? Banks need reserves primarily because we have a two-tier banking system. Remember, we learned earlier that inside money is settled through the outside money two-tier banking system. And so banks need a certain amount of reserves to be able to settle their interbank payments. Banks are also required to hold a certain amount of reserves in order to be able to operate efficiently on this system. The fact that the central bank doesn't directly control the money supply through the money multiplier does not mean that the central bank has no control over the money supply. In fact, the central bank is still just a huge bank that, in theory, can make loans to non-banks and has enormous control of the banking system through control of overnight interest rates and other policies like quantitative easing and even restricting a bank's access to obtaining reserves and other such assets in the first place. Damn, I've been trying to kill the money multiplier for like 10 years and this thing just won't die. Don't forget to like and subscribe. Thanks for listening.